Good morning for this, and thank you very much for joining us today at the symposium that we have today. We are glad that you have chosen to come along. Like we've said, our agenda today is the role of the developers in affordable housing, and we'll also have a topic to do with the impact of COVID to the developers and to the real estate sector. Before we begin the program of the day, allow me to open with a word of prayer, and we'll ask Ernest to open with a word of prayer. Thank you very much.
Let us pray. Almighty Father, we thank you for this wonderful day. Even as we start this property symposium, we ask you for your blessings. We also thank you for the fact that we have an interactive session with our customers. May we impart knowledge so that they may understand the property business better. We also pray for the presenters and everyone who has joined us today. We pray this, believing and trusting in Jesus' name. Amen.
An interaction section it will be, and we expect that if you have any question, please feel free, put it on the chat as we go along. At this point in time, allow me just to do a little bit of introduction and introduce to you. We are Cooperative Bank of Kenya, and Property Hub or mortgage finance is within the Cooperative Bank Group Limited. Within Cooperative Bank, we have got 6 subsidiaries. We have Cooperative Bank of Kenya, Kingdom Securities Limited. We have got Coop Bank of South Sudan. We have Coop Consultancy. We have Kingdom Bank, and then we have Coop Trust Investment Services. Within there, we have 3 divisions that does the outreach in terms of the businesses. We have corporate and institutional banking. We have retail business banking, and we have cooperatives division. Coop Bank is the 3rd largest commercial bank in Kenya today, with about 457 billion and profitability of about 20.7. The share capital is 65 billion and customer base of 7.1 million. Currently, we have a network of about 159 branches and 11,000 agents across the country. We have SACCOs who are our members, and we have got 1,150 SACCOs with about 15 million members. Our role is to continue creating solutions, and especially solutions even around the housing and any other financial services, to keep our customers within all these segments in a way that they are able to continue transacting besides all the issues that are there. So even as we begin our function today, I think allow me to be able to show you this symposium comes on the back of a round, and a round that we had. But I think before we do the round, let's have an overview of the issues that will come in within the symposium. I think one of the key things that have come through now is that the sale of properties has changed, and we are doing what we'll call more of e-selling and virtual tours, of course, because we have to react to the issues that are out in the market today. And that has seemed is one of the topics that you will hear more about, of how that one is happening. Affordable housing, I think this is a provision of affordable housing, and which is within the Big 4 agenda, and of course requires a lot of innovative housing solutions. Again, we'll hear a lot within the week of these key topics. I think of critical is to note, for so many years we've not been able to get through in terms of affordable housing. But I think within the last 3 to 4 years, a lot has happened that has made it even more easier. There are registrations that have come in, research on material, the financing models, the customer awareness, the financial instruments that have come in, like MLC and the rest. So I think a lot has happened around the affordable housing. And I think that within the week and within today's session, we'll try to interrogate what has come and how does it help in terms of provision of housing. I think the other one is solutions. I think for us to be able to achieve, there's a lot of solutions that have come into being. And I think some of them are turnkey solutions that are looking through and doing at one stop the whole housing agenda. Flexible financial solutions, like I'll put across, and again, demand-driven sales. I think for the first time, I think we are looking into development driven by demand as opposed to supply. Supply, I think the capacity is not badly off, but I think the joining between the demand and the supply, I think that has been a big issue. Then the last and not the least, I think, is the digital rental correction. I think this has come in as one way of being able to manage the events and the situations that we are in now. And I think it's a topic that will also be handled. So within this 1 week symposium, these are some of the things that you will be able to interact with. Feel free, again, to ask any questions. Feel free to interact with us. And we thank you for joining us. Thank you very much.
The Good Home Mortgage Property Hub is officially open.
Thank you very much. And audience, thank you. You've seen how it was in the round for the Property Hub. At this point in time, I want to introduce to you Patrick Masharia, who is our Property Hub manager. And even as he comes to settle in, I think I want to settle him down with a question. And the question I want to ask him here is that what would you advise our customers? Do we buy a property now, given the circumstances that are there in the market? So I think as Patrick settles down, that is one of the questions that he's going to answer. Do we buy properties now, or do we wait for the curve to flatten and the COVID to end for us to buy properties? Thank you very much, and help me welcome Patrick, who will take us about selling properties during COVID. Thank you.
Thank you, Chris, and thank you everybody for tuning in. My name is Patrick Masharia, as introduced earlier, and thank you for the question you've posed, because it's a question that we come across more often than not. People always wondering whether they need to buy or to build a property. And this is a question which, quite frankly, would take quite some time if you were to deliberate on that. But maybe responding to that question in high level, what I would consider in your shoes, if I was the buyer, would be what I have in mind as far as the property in question is concerned. Am I buying this property for my own occupation? Am I buying this property to rent out? Am I buying this property to speculate and maybe in future earn some capital gains on the property? So these are some of the key considerations that I would have to put in place while trying to respond why I would want to take on a property or to build a property. Now, I know there is literature circulating advising us on the different things we need to consider, but I think those are the key considerations that one should have in mind when attempting to buy or invest in a property. Now, I'll also encourage our listeners, I'll encourage our viewers to keep asking us questions, to keep posting their questions, their chats and comments on the chat besides there. And we will endeavor as we progress with engagement to respond to these queries and keep us all at par. Now, I'll want to dwell on the topic that I'm supposed to discuss around, and I want it to be an engagement. So feel free to keep questioning us, to throw your questions, and we will respond to them. And I'm here to talk about selling properties during the pandemic. And there are three key areas that are being witnessed in today's property market. One, I want to talk about the disruption that we've seen. And I think the disruption in the property market has hit us in ways that we've not experienced in the last several decades. We've seen the pandemic change the status quo in a manner that beginning of the year, we didn't know that we would be limited to engagements that are not one-on-one. We've seen people now changing from one-on-one engagements to more of the engagements that depend on gadgets and on other platforms which are more or less virtual in nature. With regard to meetings and people who conduct business, that has also affected us in a big way because we are seeing people engaging more through online platforms, including through meetings, as opposed to the initial way of doing things, which was more of the one-on-one engagements. Of course, this is in a bid to observe the social and physical distancing. And as a result, what we are seeing in the market is that we have an additional cost in the way we've been doing things. Whereas we used to rely on physical meetings, you now realize that you have to invest in technology for you to run your business as usual. Now, the disruption we've seen has led us to adopt a new normal, which is more of relying on online platforms. Like I had mentioned earlier, we are seeing property sellers selling and marketing their properties through online platforms, up to and including chats, SMSs, and what have you. We are seeing the same marketers and sellers relying on property portals to portray their messages to the buyers. We've seen virtual tours which are taking center stage, as opposed to what used to happen initially, where property sellers would accompany buyers to view the properties on the ground. We are seeing the sellers relying on virtual tours to communicate the same to the customers, basically for them to enable customers understand what it is they are selling. There's also the element of social media marketing, which is very live today. If you pop into any of the social media platforms, you'll see property adverts talking about the different properties that are available. Now, for those who have invested in properties for rent, we're also seeing a shift in the manual collection of rent to digital platforms, which are not only reliable, but also sustainable looking at the trend we are taking. Now, in the end, as another speaker will be speaking to this later, we'll also see that there's efficient management of properties arising from these online platforms. Now, in effect, this has also in a great way affected the market demand in the country because we are seeing an increasing demand for housing that is affordable. And I know we'll have a speaker who will be speaking into this, so I'll not dwell too much on that. There's also more demand for standalone units and land, also inclined towards properties that are more affordable. We're also seeing a shift in the way we've been interacting with SACCOs, such that SACCOs are now being considered as a key platform to drive the affordable housing agenda. We're also seeing flexible financial solutions for landlords. And also I know there's a speaker who will be speaking into that also later. And this has also led into things being made easier, particularly for the people playing in the property market. Now, some of the property types that we have available and what we are seeing being flouted in the market today range from residential properties. And if you walk around the suburbs of Nairobi, you're looking at properties in areas like Ngong, Mombasa Road, Limuru Road, Kitengela, Ngong, and similar environs. We are also looking at commercial properties, which include offices, residential blocks, as well as serviced apartments. This being in line with what has been caused by the disruption, where you find that people are also now taking up properties, modifying them, and renting them out as serviced apartments to earn an income out of it. And another interesting trend is the kind of demand we are seeing for properties, which is more or less outside the environs of Nairobi. You're looking at properties in Kajiado County, you're looking at properties in Nanyuki, you're looking at properties in Kiambu and Murang'a County, and even further off in areas like Nakuru and Eldoret. Important to note is that most of the buyers coming in are not only buying these properties to put up units for their own occupation, but you're also seeing a new trend where people, particularly groups based in the diaspora, are coming together to buy land, probably subdivide and sell, or others who are buying land to keep the same, to sell at a later time to earn the capital gains in the same properties. Now, what are some of these properties that we are looking at? We are talking about apartments that are for sale in areas like Syokimau, Nairobi. Others are properties in Ruaka. We have an interesting concept along the coast in Vipingo, precisely. We're also looking at apartments in Sabaki area of Mombasa Road. And these are properties that range from 1.155 million all the way to 4.5 million shillings. We're also looking at other properties which are for sale, apartments for sale, others in Race Course area of Nairobi, off Ngong Road. We're also looking at apartments in Sabaki, that is on Mombasa Road. We're also looking at apartments in Ngong, near the town, and also apartments in Molem area. And these are properties that are ranging in price from 3.5 million shillings all the way to 6 million shillings. Other properties include residential units, ideal for the buyer's own occupation. And for instance, we have a few here we've mentioned, like maisonettes in Kitengela, bungalows in the same Vipingo area, bungalows in Kitengela, maisonettes on Mombasa Road. And these are properties which will range in price from 4.5 million shillings all the way to 16 million shillings. Now, we are also looking at commercial properties. This is where we have investors coming into play to buy properties, maybe to sell, or also for their own occupation in the case of the office space, or properties that will earn them rental income. These are properties that range from office space in Westlands. There are commercial buildings outside Nairobi, like one we have in Nyeri. We're also looking at a block of apartments at Kahawa, and also serviced apartments block in Lavington area. Now, in terms of the pricing, these are properties that will range from 54 million shillings all the way to 675,000 shillings. And when it comes to land, there are also trends we are seeing where, like I had mentioned earlier, people buying land for different uses. And some of the properties we are looking at here include plots in Rongai, Tuala area, that is. We're also looking at others in Kitengela area, Merisho of Matasia, and all the way in Thika. We also have properties which are also available for consideration. Now we have Blue Anemone, which is showing right now, and this is located in Ruaka, approximately 200 meters off Limuru Road, entailing 2 and 3 bedroom apartments. These are almost ready for occupation, and the apartments come complete with fitted kitchens, spacious lounge, laundry area, while the external amenities include perimeter walling, cabro paved parking, adequate water storage, amongst others. The 2-bedroom apartment is currently selling for 9 million and has the potential to earn you 45,000 in rent, while the 3-bedroom apartment, which is selling for 13, with potential to earn you 60,000 a month. There's also Race Course Gardens. The development is in Race Course area, approximately 400 meters off Ngong Road, and this entails 1 and 2-bedroom apartments, which have been done complete with a swimming pool, children's play area, large central garden, commercial area, kindergarten, and ample parking with tarmacked driveways. There's also a borehole on site and ample water storage facilities. This development is ready for occupation, and the studio apartments, which measure 25 square meters, are selling for 3.5 million, with potential to earn 25,000 a month. The standard one-bedroom apartment, which measures 37 square meters, is currently selling for 4.8 million, with potential to earn 35,000 in rent, while the deluxe one-bedroom, which measures 40 square meters, is currently selling for 5 million, with potential to earn 38,000 shillings a month. And finally, the two-bedroom apartment, which measures 72 square meters, is currently selling for 8 million shillings, with potential to earn 45,000 shillings a month in rent. So, ladies and gentlemen, as mentioned, today we have interesting topics, and our next speaker will be talking about the impact of the pandemic and the developer's role in affordable housing. And the speaker taking us through that topic is none other than Chris Shege. But Chris, before you commence, I think I would want to respond to, or rather I would want you to take one of the questions which has shot up. And I think this is an interesting question which will set pace in view of what you're supposed to be discussing today. And the question that we would like you to discuss is, are there any laws affecting implementation and uptake of affordable housing in Kenya? So Chris, please take that. And even as Chris comes in, I'll still remind the viewers and the people who've logged in to keep sending in their questions and their chats, and we will respond to all of these even as we get going. So Chris, welcome, and we look forward to hearing from you.
Okay. Thank you, Patrick, and thank you, our audience, and thank you also for a very insightful presentation. And I think if I hear you correctly, the question asked by one of our audience is whether there are laws that govern or impact the affordable housing. Yes, there are certain registrations that have been put in place, some that have already successfully gone through, others are still in the process. But I think cardinal about with the laws is the one that facilitates refinancing, and that is the one that governs KMLC. Because KMLC has come in to really support the affordable housing in that it has gone even to define and say that anybody earning less than 50 will be considered. It has also provided a facility that will help enable the banks to be able to play in that area. I think critical about with the registrations that have been done is that they have all been geared to availing houses to hitherto a segment of the market that was not able to take advantage. I think the benefit of this all will be yield when eventually the whole thing is rolled out. Currently now, I know there are several developments that are out there, some by the government, others by private sectors, that are targeting this era. And I think the rules and registrations that relate here are evolving by every day. So thank you very much, Patrick, for your question, and thank you, the audience. Allow me to go through the topic of today in a way that we understand it and the way I've taken it. And I think allow me just to ask ourselves, when we talk about the impact of COVID on affordable housing, or even on the market or the real estate, maybe the simple question is that nobody imagined there before that behavioral change could mean so much for the world. The only thing COVID brought about was social distancing. That is, I need to be 1.5 meters from the next person. And that by itself has redefined the way real estate is defined in the world. And basically, I think that's where our main impact starts from. In defining 1.5, of course, an architect will tell us better, it means then that you must have a space that is defined by 1.5 in terms of capacity from where we are defining, depending on the size of the seats and the tables. If you look at the offices, social distancing has come into challenge whether open office is still trending and whether productivity will still be within when you have an open office. And social distancing has also come in to ask ourselves, will the doors that we enter in, are they the same? Will we have the same kind of washrooms? Are designers going to come with different things at a social distancing? I think these are now very, very ripe topics that are all over there. And of course now, for any developer, for any person in real estate, these are varied questions. And of course, where does it touch most? It touches most when you talk about the income. So what does it mean? Since real estate sells space, and space is sold by per square meter, if then it means then that the definition has come in at 1.5, it means that the productivity per square meter of a building is not purely defined by what you want to buy, but again, commensurating services that are associated to it. So social distancing by itself has redefined the way we look at real estate, and we do hope that as research continues, we'll see what is going to come to be. I think the another terminology that has come in through that is very ripe is work from home. And the work from home, I think, has redefined. Do we still need offices? Are we going to be, are you going to continue at home? Do you need an office setup? How are you going to do it? These are not things that are there. And this has tended now to come in an impact. And we've seen a number of people try to offer offices at home, others trying to convert bedrooms into homes. And all this has its own big impact, because when they go in and they are asking for facilities, they are not asking facilities to construct a building. They're asking facilities to renovate their building to be able to match the circumstances of the time. So work from home, as simple as it is, it has got its own demands from both for the aspect of redesigning and to the end in terms of the financing. I think the most interesting one is washing your hands and sanitize. I think if you look at washing your hands and sanitize, people do not know whether to introduce basins on the gate or basins near the door or basins outside the offices, but it has become as a need. If you go through now the real estate assets all over the market, you'll see some containers with water. Will this be a standard? Will this be changed? Is that how life is going to be, or what will change? But I think of them all, I think the one that has tended to redefine how we are is what they call lockdown. Earlier, when Kenya was almost on a lockdown, I think some of the people are not able to access their assets. Outside the metropolitan, that was an no-go zone. And it tended to give people a challenge in that, what do I need to invest in? Number two, there are quite a number of people who are locked down maybe in what we'll say a property that does not have a big circulation area. And no wonder there are developers who have reported and say that quite a number of people have come into the market looking for properties with compounds. And that means people will be evolving, moving out of the CBD to areas where they can be able to afford a compound. Now, in this case, this kind of an issue, then it means lockdown has tended to change the perspective of the investor. And when you're investing in a home, I think it's looking through, in the event such a thing comes in, what happens? I think the last one is, I think, the reduced social gathering, which has tended now to redefine. Do we still need the big halls that we have? Do we still need the big open spaces that we have? Are they going to remain the same, or are we going to have changes? Our audience, I think these are highlights, and I've tried to be very practical in terms of how I bring them. But of course, I need to bring them in a way that all of us are able to appreciate. The others are very simple and straightforward. Healthy eating has come in, and I think we are now forced by circumstances, because healthy eating is part and parcel of how we survive right now. And of course, very conscious. I think family movements, I think those are very positive things that have happened. Families have been put together, and I think with this, it means that a house being done, maybe you require a family room, somewhere the family can gather and stay and feel relaxed. I think e-learning is the issue. Do we start a school at home, or how do we adapt our homes or our places in terms of e-learning? How do we deal with the space around the classrooms and the next? How do we, again, online meeting? Online meeting is a standard like one we are doing now. Are we going to have online meetings redefining our future? And what are the key issues that are going to come through? I think this sets the pace in the issues that we're going to discuss. If you look at what we've been discussing, actually we've been discussing these things, and right now, the impact of all that is raw rents. And definitely we look at maybe real estate will have a flat growth, if any. And the raw rents is as prices try to adjust themselves, we do not think that there'll be that growth. And the raw rents, of course, are affected by so many factors, including, of course, the space reorganization, some of the businesses have been closed, and that by itself causes raw income. And of course, it means then very few people will be willing maybe to invest or continue investing in the way they were doing there before. Occupancy, I think that we've said it, impacted occupancy. But the occupancy might reduce or might not reduce, depending on how the whole thing evolves. Because if you require more space, then it means you'll have more occupancy you require, but the rental might be the same or even lower. So the other thing that we look at, especially the office buildings, are going to be impacted. In that, if you look at an office building, the biggest challenge that you're going to see is that if some of the organizations decide that it's a work from home and works and they have the productivity, of course, there won't be as high demand as it was there before. So what would happen? I think our audience, if you look at the reduced foreign investments, I think that's normal as people try to readjust and look through their priorities very right. Disruption of the retail segment, especially in a market like Kenya, I think that has been real. And if you look through, most of the retail sector has been affected in a way, I don't think it'll go back to what it was there before. Most of the people are scared to go to the big shopping malls, and the malls are struggling when it comes to the footprint. However, innovative, some of them have come and put in drive-in theaters within those malls and other activities that can also be able to be afforded using the social distancing. Others have come in and put in very massive space, which allows for the same kind of an experience, but not naturally closed in together. So space is going to really determine even how retail space itself, performs. I think there are new sets of risks that have come in that were not there before. And of course, looking at it from an eye of a financial, there are things that were not factored in there before. And this risk will come in to mean that for you to come in with a proposal, you need to rethink afresh. Look at the new things. Look at all these things, even as you propose, on what you want to be able to do. And the risks that will emerge, some of them, of course, will affect who gets credit, and others will impact on what kind of a building can be successfully defined for use for either, whether it's we are talking about a building for use as a home, use as a retail space, use as a logistics center. I think they are going to be impacted. And when you come to risk analysis, those factors will come in. I think one of the key things that we need now to look at critically is the behavioral change and how it impacts on everything. And I think it's something to look at. How do we move forward? How do we monitor behavioral change? And how do we make sure that it doesn't disrupt the way it has disrupted this time? Technology and innovations, I think we cannot forget that technology are the backbone of now today's market. And the more and more we think about the changes, the more and more technology is coming in. And in every area where we are vacating without a solution, technology is very quick to come in and replace. Now, the whole thing is that if the systems and the things are not adapted to that kind of a technology, then of course it becomes a big issue. And two, without technology, sustainability becomes a big issue. I think gone are the days when anybody could work on their own. And I think the role of the government is reinforced by the current market. If we look most of the times, maybe from around March, when things were very tight, everybody turned their eyes to the government. And it's only the government who are able to mobilize. In the area of real estate, I think for a long time, the private sector has been working maybe on its own and taken up some of the roles in their own way, and which has been commendable. Try to do a road here and there, do a sewer system here and there, do other things that maybe naturally are to be offered with the government. We don't think those things are sustainable in the long run. And I think partnership with the government, reasoning through the government and working towards, I think, is what can help us achieve what we are even saying affordable housing. I think the last in this one, I think, is the impact of technology, the Zooms, the Teams, and everything else of this world. I think they are going to have an impact. And I think you might see a replacement. Space is reducing, space usage, and the use of conferencing online is increasing. Let's address the impact. And I think this case I'm looking through at more of the developers. And looking at the developers now, I think one of the key things that I think we need to look at is that developing affordable housing is not a mean task, purely because the margins are very less. And if you come into this market and you are driven purely on the margins, it might not be the market that is the best. Meaning then, if you want to come to this market, partnership is key. And partnership starts from the own users. In the photo, what you can see on your screen, these are ladies who are offering what is called sweat capital. And they are participating themselves. And by so doing, you reduce the labor. And you reduce the labor, and they are the one who are saving the sand or doing something in the construction. You've also put them, and they can put in their own labor to reduce the cost. These are some of the things that will help. Two, the material they seem to be doing, this looks like local material, which they can use locally, which of course also means that you are redefining their role in here in terms of provision of material, and two, offering their own labor, in which case the two combining factors are going to give you a solution in terms of cheaper housing. I think the third one is they are cooperative based. I think there's a need for us to continuously look through or the role of cooperative in terms of affording houses. Why do I say so? I say so because for all wrong, people are able to come together. And when you come together and you afford most of the resources maybe in a cheaper way, and you afford, if it's land, you can be able to buy together. And I think we've tended to see that the cooperative model of housing works even much better if you compare to the other models. So if you are able to use, number one, your sweat capital, you look local material, you do a cooperative-based model, and there's more collaboration with the government, in most cases, then what you're talking about is that you will be there, and you will be there, and you'll be able to see that it gets you to the next step in terms of the development. I think the key issue that comes in now is if this continues, what might we see? I think the critical thing we see is that there'll be demand, and demand will come in terms of demand for land for some of the areas. And if you look at the kind of demand that comes in, Nairobi for the last maybe 10, 15 years has had a lot of changes, especially due to the bypasses and the road infrastructure that has improved a lot. What has that meant? It has meant that the urban expansion can be marked in different areas. And some are what you'll call rental, renewal areas, and others are the expansion for the owner occupier for individuals to go in. I think this is where the developer now needs to put their eyes into. As the government opens up the areas, I think it's important for developers to follow suit. For all of us who were able to recollect what happened on Thika Road, Thika Road, before the Thika Road was done afresh, an acre of land, if I can remember very well in those years, to be about anything maybe 5 to 15 million, even the ones that are touching the road. I remember by the time they were finishing, an acre of land was going for even 150 million, meaning then the whole area had been transformed. I think if private developers are going to come in and partner and go to the areas that are being opened, they can be able to afford houses that are more affordable, but at the same time, where infrastructure and services are available. So collaborating with the government, I think it's very, very, very critical. And two is looking at it from an all-inclusive perspective, in which case, setting up a housing estate alone without a commercial center, without economic activities, might not take us where we are going. It's a combination of both that will give us what we are looking for. So even if you settled 200 people in an area that does not provide economic activity, then there'll be a challenge. And the challenge here will be, these people will have to continue maybe migrating from that point to come maybe to the CBD or other areas that offer them economic activity. Hence, the all-inclusive aspect of having the government on one hand, the economic activity on this hand, the social services on this hand, and in that way then develop. Meaning the role of a developer who is maybe a small-time developer, I think he needs to look at it afresh and see whether there's a need for them to continue and look at with several people. So what you are addressing here was the role of a developer in terms of provision of land and houses. Now, if he provides land, what is expected of this developer? More than any other time, market research, I think, is going to be very critical, because gone are the time whereby just because you own the land is fit for residential or commercial. I think a research is going to help. Why? In affordable housing, our thinking here and our understanding is you need houses that have demand. You cannot afford houses that you are building to sell. You must sell to build. And if that's the case, then you must research very well, and the concept development must be very well and flowing all through. It is only at that point in time that you can be so sure that you have got a development that can be able to meet the market needs. I think the other thing is a graduated way of doing it, which you can say is develop houses or provision for service lands, in which case, by offering land and trying to service the land and then turning the land to a house, it's a graduated way. And I think it's the best roadmap in terms of going that way. Because as a developer, you must not look that you can do a monotype of 5,000 houses in one site and think that people can run with that. I think there's a need to have a very integrated approach with the social amenities and everything else. And that's where the partnerships and collaborations, clear value chains must be established. And the value chains they come in that if somebody has a technology, if somebody has a land, and another person has the finance, I think these are now the kind of things that need to come to play. It might not be a sector where you go on your own, do everything, and expect that you're going to get. In terms of selling houses, I think this is going to be even more and more detailed. And I think we've just illustrated, I think Patrick was there saying how he thinks we can be able to sell houses. But now, for this affordable, it's going to be more tricky, because unless you're selling these houses in bulk, and in bulk means that you have a way of managing them, transitioning them, it's going to also be tricky because the process of taking over and handover of the house can take some time. So given the margins that are there, you need to look at a way that by the time you finish a project, you're able to hand over at once. If you don't do that, why then in most cases, you'll be eroding the value. That's why demand-driven projects is important. And again, organize of partnerships that can allow you to offload your projects at once. And of course, give proper management. One of the key things that has lacked maybe in most of the big estates and projects is sustainability of value. Why? Because when they are done, much is said at the point of handover, but beyond handover, the value is not sustained. The biggest danger with this is that a house or a mortgage will run for about 10 to 15 years. Then 10 to 15 years, if the project was not managed well in terms of the estate, it goes in then that the house will erode in value. So that's a very critical point that a developer needs to look at. I think the key thing that also needs to come in is that the role of professionals is going to be very critical, and to look at that we do not impact on our environment. And I think this is going to be very critical going forward, because you realize that when you talk about affordable, the density is high. So if the density is high and you don't take care of the environment, the area does not become a good for habitation. So how do you have the innovative way of having the proper roads, have proper water, sanitary services, and everything running, bus parks, markets, and everything else? How do you ensure that under affordable, this one is there? And that's why the integral master planning of land, like what the government is trying to do, and I think has already started somewhere in Mrorongo, I think is going to be very critical, where the land is master planned and developer just comes to play in the area with what is available. I think collaboration again, even outside Nairobi, and looking through at what the county governments and the national governments and how they can work, they can assist each other. I think the role of the bodies that deal with housing, including national housing and the rest, and again, a clear reflection on the asset management, i.e., how do we manage that asset? Because even if you're doing a development can be a house, but it's also an asset to somebody else or a security to a bank. I think looking through at that interplay is going to help us, and I think it's a key role of the developer if we are going to succeed in this war of providing affordable houses to our citizens. The developers need to have end users in mind. I think that's one thing that has not been happening there before. And when you talk about having end users in mind, I think you're developing houses and you have identified who is the person who is going to take it up. Then what does it mean? That at all times you look at his lifestyle. You have to integrate this one with what do you want him to get out of this estate? Do you want him to live here? A simple Kenya household, maybe a standard way, you're talking about 4 or 5 people. So if you're talking about 5 people and you set up 500 houses, then you're talking about 2,500. So even if you avail the house and don't look at what the other people do, I think you'll have a challenge. I think the other thing is look through financing way or financial services. There before, most of the developers will look through that most of the projects will be financed by cash, and very few may be by mortgage. Maybe that is not sustainable given the sector that we are looking at. So the role of formal structures that are going to allow maybe some mortgage schemes. And I think if you look at KMLC, it has come to take care of one segment. A number of employers have got schemes that they are provided for their employers. I think that would be very critical for the developer if he's going to play in this market very competitively. The role of Kenyans living in the diaspora is very critical. Critical in one, because they have a lot of what they can call capital, which they can inject, number one. And number two, they are buyers, they can be able to buy. And to a large extent, they have a role to play here, whether it is for their own use or for the market. Looking at the market, when you talk about affordable housing, affordable can be ownership or rental. And whichever way, Kenyans living in the diaspora have a good space to be able to create affordable housing, but also rental houses for that matter. So their role, I think, needs to be looked through. But I think as a developer, then you need to have products that are familiar to them, products that are going to come with management. Because for sure, a Kenyan living in diaspora is rare that they'll be want to be using that house. So when you sell somebody a house and you don't give him how to manage the house, or you don't give him how to pick up his rental, I think you've done a disservice. So I think this one comes in, and I think in a topic we'll be having here on Thursday and Friday, we'll tell you more of what we have for Kenyans living in the diaspora, how they can be able to buy houses, and how they can be able to manage them, for them to be able to reap for what they have. I think the other one, in terms of end user in mind, I think the SACCO and the cooperative membership. I think SACCO is a big movement. Like we put across, we have 15 million SACCO members. And SACCOs are their vehicle, and they own them, and they love them. And I think this seems to be one of the biggest solutions that you can use for affordable housing. I think what we need to look at is that for the developers who know that they are good in developing, I think they need not look far. RAND is available with SACCOs. I think here is a partnership. I think the key issue to ask themselves is how do they want to come in? There are so many models of coming in terms of SACCO housing. Some you can come with incremental housing. Some you can come with the straight financing. Some you can come with partnerships. Some you can come with apartments. You can come with rental units. I think there's so many ways of being able to get this one. But I think the key about them, the SACCO offers you the rent, and they have enough of it, and has the membership. So if you have that ability to be able to deliver, and you have the resources to be able to deliver, I think it forms a good start, especially for affordable housing story. If you look through in the market right now, I think some of the most successful projects and are the ones that are really targeting the end of the market, whereby you are able to grow with your house. And I think talking about growing with a house, I think is looking at a simple analogy that we give. If you look through in a life of a person, maybe in Kenya, let me reflect on the people who went through maybe the University of Nairobi. When you're in the university, you basically use about 9 square meters of space. That's a room that you are given. But you realize that for a long time, until maybe the last 5, 6, 7 years, you could not avail a house of about 9 square meters being sold. What does that mean? That a person starting their life could only buy a house that is about 50, 100 square meters. I think come to reflect on this. Somebody who is living on 9 square meters and the following year is moved into a 50 square meter house. So of course, the 40 square meter is useless dead space for that person, and he doesn't need it. And even if he buys that space, then it means that he's going to struggle through his life because he doesn't have that kind of income. What does that mean? That means that if you look at what you're saying there as a core unit, that's a unit that is done maybe to about 10 or 12 square meters. And then as life goes on, then you're able to increase that houses as your demand comes in. These are going to be innovative ways that are going to help most of the developers deliver. So even a developer coming through, don't look through at doing your 5 bedrooms, 4 bedrooms and everything else and hand over. No, look through if the demand is for them to have a core unit and then leave the person developing the rest, let it be, but ensure that the services are availed. One of the key things that we have seen is, and it's a fact, we tended maybe to have complicated our way of demand for houses. And this one, I just took it up and it's a research done, that Kenyans have very high standards when it comes to structural strength. And I don't know why most of the people will ask the structural strength of a building. And it's so high that according to developers and agents, a person will be asking whether the house can withstand bulletproof. I think that's a very interesting way of looking at a house. And you ask yourself, why would somebody want to define houses from a bulletproof perspective? I think coming through, of course, for a developer, I think it's an insight that security is something to look through. But it does not mean that we complicate the housing and make the cost very complicated to an extent that we are not able to afford because we have maybe overbuilt, if I can use that word, overbuilt the house. So it is how you're able to balance out the needs of the market and what can be done. I think the other thing is that we do not think that purely this person asking about a bulletproof means about a bullet. But I think what they are saying is that they want a house they can rely on. They want a structural strength. All these points, I think, are directing to the developer and what he needs to do. Ladies and gentlemen, this tends now to create us a ground where we can start a discussion on, can the developer now come in and express and put through a need? And even as we look through the kind of questions that are coming through, I think it's starting to ask, is the developer now ready to meet the market demand so that he can put in his supply, and in most cases then we can end up with what you're looking for, which is affordable housing. Thank you very much for this, and as we commence, thank you very much, our audience, and right now we'll start with a question and answer at this moment. Thank you.
Okay, thank you, Chris. Thank you, Chris, for the insights around affordable housing and the role of developers. I think this is a topic that is currently the in thing, noting that everybody the government and everybody who is in a position of leadership has to mention affordable housing in line with the government's agenda. And I think, as mentioned earlier, it is important we have that in our planning. And even as we proceed, I think there are questions which are coming through. We have quite a number from people who are in Syokimau. Others, there is Maureen from Kitale. We also have Joshua from Langata who posed very interesting questions. And I'll ask that our panelists be ready, because we want to respond to all these questions so that we can bring clarity based on what customers are actually posting through. And for this particular session, I'll want to mention the three panelists we have. The first gentleman is Mr. Peter Kihara. We also have Ernest Otieno, and noting that Chris has taken us through the issues around affordable housing, Chris will also be the third panelist. And in line with what you've just told us about Chris, there's a question that has come through, and it would be important you just bring the clarity even as we look at the other issues. And the first question that has come through, this is from Maureen, who is from Kitale, is with regard to affordable housing, can one apply for a mortgage before he or she has identified a property to purchase? So Chris, because that is in line with affordable housing and the topic you've taken us through, please take us through that. Give us a response to that.
Thank you very much, and thank you, Maureen. I think, yes, you can apply, because what can be available to you is preliminary evaluation, which does not require you to have gotten the property. So we'll do the initial financing evaluation, and then from there, once we have done preliminary evaluation, that will help us to understand precisely the ability and everything else, so that as you go to the market, then you have a certainty that this kind of money is available. I.e., if you went now and you came for a preliminary evaluation, you'll be told that you can be able to get about 2 million or 3 million. So as you go to the market, you can look for a property that is worth about that 3 or so million, or look for a property more than 3 million, knowing that you can get a 3 million plus your own equity. Thank you.
Okay, thank you, Chris. Thank you, Chris, for taking us through that. And I think tied to the same question, and this time round, we would want Peter Kihara to respond to this. Because a question tied to that is this that we are posing to Peter Kihara. And there's another client, this is Irongo from Syokimau, who is asking, what is the maximum term for the available mortgage facilities? Assuming this person is interested in taking up a facility, what is the maximum term for the available mortgage loans? Peter Kihara, please.
Oh, thank you, Patrick, for that particular question. Generally, in the market, the maximum tenures that we have are around 20 years, but we have a few institutions that would give 25 years or 30 years, depending. But really, what drives term of the mortgage is financial institutions' availability of long-term funds. The funding mortgage is largely, in most of the institutions in Kenya, is funded through deposits. And therefore, deposits said to be short-term in nature, that is deposits for 6 months, 12 months, or therein. But you will be able to get a mortgage of up between 20 years to 25 years. But it's good to note that with the entry of institutions like Kenya Mortgage Refinancing Company, the mortgage tenures are likely to be improved in terms of their number of years, given that participating institutions like Cooperative Bank will be able to get long-term funding of up to 25 to 30 years, and therefore you'll be able to qualify for longer extended tenures with the bank. Thank you.
Thank you, Peter. Thank you, Peter. Thank you, Peter, for responding to that question. We also have sorry about that. And I think this is a question that I would rather have Ernest jump in, because tied to the earlier question we've responded to. Ernest, I would request that you respond to this query. What is the maximum size of land that the bank would consider on mortgage? What is the maximum size of land that the bank would consider for a mortgage? Yes, Ernest will be responding to this question, and
So thank you very much. Yeah, so we could finance you to purchase land anywhere. So so it all depends on your budget. So we don't have a limit to how much or the size we can finance. Thank you.
Thank you very much. I think on the same note, and I'm sure there is an issue that came in. I think I'd like to ask Peter Kehara to maybe shed a little bit of light. I know he's quite experienced in that area of the registrations that have come through to support affordable housing, and maybe more so looking at the angle of KMLC. Peter Kehara, go ahead.
Come back, tell me. Thank you, Chris, for asking that particular question. KMRC is a member institution, and it's good to point it at the beginning that Cooperative Bank is a key shareholder in Kenya Mortgage Refinancing Company. And the role of Kenya Mortgage Refinancing is as a non-deposit taking financial institution will be to extend long-term funding to participating members, of which Cooperative Bank, as I have said earlier, is part of them. And with that, the bank then will henceforth be able to give extended tenures in terms of the mortgage facilities. We can extend it beyond the 20 years currently that we are giving. And the other advantage is that we will be able to get long-term funding, which means that we will be able to start issuing fixed rate mortgages, because the funding that will be coming in will be fixed in nature. It will be long-term in nature, probably up to 30 years. And therefore, that will give advantage to our customers in terms of the peace of mind they require with regards to interest rates variability. So it will be great for our customers to participate and to borrow through the bank. Thank you.
Okay, thank you, Chris. Thank you, Peter, for responding to that question and for taking us through. And the next question, which is more or less tied to what you're taking us through and what Chris had alluded to earlier with regard to the mortgages that we can explore. We have Joshua from Langata, who is also posing a very interesting question. And the question is, does the bank consider joint mortgage applications? Does the bank consider joint mortgage applications? I would kindly request that, Chris, you take up that question and advise Joshua on whether he can do a joint application to take up a facility.
Thank you very much, Joshua. And maybe that comes in very handy. At this point in time where people have also lost income, and I think we are quite aware of how the market has been, and some people have lost their livelihood. I think joint applications are even one way of being able to salvage your situation. And in which case that even a property that you had even taken as an individual, you can introduce somebody else to come to become a joint application so that you're able to service their own better. But again, also from the word go, there's nothing that stops you to have a joint application. When there's a husband and wife, I think the definition is very easy. But if you have two people who are not a husband and wife, I think the definition needs to be very clear so that it's known in the event something is not happening, how do we deal with a group? Meaning, two people can just join in and say they want to help each other in terms of income, they want to help each other in terms of maybe the kind of property that they are doing. But joint applications are very welcome. And at this point in time, I think is one of the ways of being able to manage the current issues that we have. If you look through in terms of a joint application, if today a parent has a mortgage and that mortgage, the parent is having a little bit of difficult, it can be created as a joint mortgage now with the son or the daughter. And in that way, then, of course, is the burden. So the ownership can be there, or it can be left on the aspect of payment without the ownership. So I think depending, I think that something can happen. Again, the children can also take up together and decide to help their parents to manage a mortgage that is not working very well. And that the roadmap is the same. In which case they come together, they become joint applicants, and then they join in the parents, and then in that way they're able to assist. Thank you very much.
I think that's a good response. Thank you, Chris, for taking us through that. But I'll still request that any questions that are coming through, any question you want clarified, please feel free to post more questions, and we'll be able to respond to this even as we continue. Now we have a question that has been asked by 4 or 5 people, and I would want to pose this question to Peter Kihara. Now the question is on the areas that the bank would finance, the areas that the bank would consider a property as collateral. We have a gentleman from Kiamunyi, Nakuru, and we have 2 more from Roiro and Mavoko, who are asking, can you finance purchase of a property that is outside Nairobi? Can you finance purchase of a property that is outside Nairobi? Peter, please take us through that.
Thank you, Patrick. The bank finances projects, properties across the whole country. As you appreciate, a cooperative bank is spread out across various regions in the country. And therefore, if you have identified a property across any area, be it Kisumu, Mombasa, Marsabit, the bank does avail products for you, and you can access a mortgage product.
Okay, thank you. Thank you, Peter. I think we have quite a number of people who have logged in, and that question has cuts across several people because we are looking at people with properties outside Nairobi, and I think that's the reason why the question has been posed by several. Peter, there's a second question here, which we would want you to touch on, because somebody else is looking at the monthly repayments, and the question that is coming through is what is normally included in the monthly mortgage payments for a mortgage? What is included in the monthly mortgage repayment? Peter, if you could touch on that area also, even as we take in more questions.
Thank you, Patrick. As we are all aware, when you borrow a mortgage facility, you extended a loan. And in that particular loan, you are required to pay it in terms of a period of between 1 to 20 years. And within each and every monthly repayment, there are a couple of things that are broken down, which I might want to speak to. One is the interest component. Whenever you borrow the money, you are charged interest on a monthly basis, and that component of interest is repayable within that particular month. The other component of that is repayable within that particular month is the portion of principal. If you have borrowed, let's say 12 million within a period of 10 years, then you'll be expected to pay it in equal portions over that particular period. And therefore, a portion of the principal is also paid. And this is what we call monthly repayment, that comprises the principal component and the interest portion for that particular month. Within that particular repayment plan, we also include life insurance. Whenever you take a mortgage, you are required to pay insurance premiums on your life, and you're also required to pay premiums on fire. What happens is that you are insured in case of damage, then the insurance company would step in and make good that particular loan facility. But on your part as a borrower, then you are required to meet your monthly premiums, and also for both life and for fire on the property. The fire policy that is taken through a mortgage ensures that in case your property is damaged or is damaged through fire incidents, then what would happen is that the insurance would reinstate you for the cost of the house. And again, in terms of when house is being rebuilt, the other aspect the insurance can make good is to ensure that you stay in a habitable place and they can afford to pay rent. So for the premiums that you have to pay for your life and on fire, a portion of it is distributed, is apportioned within every month, and therefore the total monthly repayment that you pay for a mortgage loan, it will include the portion on principal repayment, the portion on interests that has accrued within that particular month, and a portion of life insurance premium for 1 month and fire premium for 1 month. Thank you.
Thank you, Peter. I think that is very clear. And looking at the questions that are coming through, I think we have quite a number that we might want to respond to about two, and then we can have others also responded to on chat. And the next question is actually to Ernest, because we have Job from Nakuru, who is asking whether he can be granted a mortgage if he is self-employed. Whether Job can get a mortgage when he's self-employed. Ernest, please.
So thank you very much. So yes, it's true, you can get a mortgage if you are self-employed. What you need to do is to submit your 6-month bank statement, the profile of the company, as well as you're able to tell us the duration of your self-employment. The business must have been in existence for a period of not less than 3 years. So once we see those preliminary documents, we are able to appraise you, and should we need more documents, we'll ask them during the process. So yes, we are able to finance you to buy a house or land if you're self-employed. Thank you.
Thank you, Ernest. Thank you for taking us through these queries. And thank you, panelists, for taking your time to respond to all these questions that are coming through. I think to our viewers, to people who've logged in, if you have more questions, please keep them coming. You can also visit us in a branch near you, or you can also visit us through our website. And also with regard to properties, you can visit goodhome.co.ke. Please feel free to engage us with regard to the mortgages, with regard to these properties, with regard to our other bank products. And I think in the interest of time, noting that we had requested to run this for a particular duration of time, I would want to invite Chris for the closing remarks, but I'll still encourage that for more questions, feel free to reach us via a media that is convenient for you, and we shall be more than ready, more than glad to respond back to you and to see how best we will be able to respond to your queries. So Chris, I'll kindly request you to give us the closing remarks and see how best we can progress. Chris, welcome.
Thank you very much, and thank you, Patrick, and thank you our audience for the very interactive session that we've had, and the very good question and insightful. And we truly thank you for making this symposium a success. And we are looking forward to seeing you even tomorrow, when we'll be handling more to do with the Tanki as a housing solution for the cooperatives. And we have a very interesting speaker, Colm Harry from 14 Trees, will be taking us through this one. So please do not miss. But even as I conclude, let me thank each and everyone. I want to thank Cooperative Bank and the people who are supporting us, the people who are giving us the technology. I think, thank you very much. I think we want to thank our audience, wherever you are. I think we've seen they are from far and wide. Some have woken up to reason up to us this morning. We truly appreciate your effort. I think we want to extend a vote of thanks for the entire audience and your interactions, your questions. And we do hope that this will continue and we'll have this one. I think we cannot be able to thank each and everyone the way we would want, but I think for us is to pray to it that this begins a journey that you can be able to walk with you. So I think from our end, I think thank you very much, and God bless you. And allow me to ask one of our own to close this event with a word of prayer. And let me call in Anne to close with a word of prayer. Thank you very much, and God bless you. I think also reminding you, even before Anne comes in, we will still be there, so you can continue interact with us. The properties will be there, So if you want any question, you can be asking. And again, tomorrow we'll be there live at 11:30. Tomorrow, 11 will be there to 12:30. So welcome and God bless you.
Thank you, Chris. Let's pray. Dear Lord, we thank you for being with us. Thank you for good health. Thank you for keeping able to bring us together and we could have our symposium today successfully. Thank you for each and every person who was able to attend, their families, and we pray, Father, that you may guide us in everything that we do. Many are the plans we may have for our lives, Father, but you alone can guide our steps. Help us that even as we move forward through the Property Hub and through all the people we're going to interact with and work with, you're going to be with us and you're going to help us that we may serve each other and be able to grow together. May all glory and honor be unto you in everything that we do. In the name of Jesus Christ, we pray and believe. Amen.
The Good Hope Mortgage Property Hub is officially open. The Good Hope Mortgage Property Hub is officially open. The Good Hope Mortgage Property Hub is officially open. The Good Home Mortgage Property Hub is officially open.